What is going on YouTube? It's Sankin. We are back with another one. Now in this drop, we're going to be covering off a lot of ground as it relates to the stock market, some crypto and our plays. But before I get this show on the road, I'd like to help out the channel by hitting that like button. If you're new, join the movement by hitting that subscribe. Alright guys, so as you know, it's testing times out there in the markets, particularly for the growth plays. You guys already know I showed you the portfolio, got the smackdown from the markets because it's growth heavy, but you guys know this is a journey. Now in this drop, I want to use my experience to help you navigate these markets, let you guys know what moves to be making to hit success. So as always, I've got a jam-packed one for you, so do make sure you stick this one all the way through for me. Let's run the first play. So before we properly kick things off, I want to touch on a crypto play. We got Dogecoin. Now for those interested, I've been watching this one over the last couple of days. It's looking like strong support is forming at that 40 cent mark. So if you can get entry at 39 cent, 38 cent, I've seen this one drop down all the way to 37 cent. So somewhere in that region is looking like good entry. Now you guys know with Dogecoin, it carries that 10 out of 10 level of risk. So with this one, you got to exercise a bit of risk management because you know it can swing wildly in both ways. So you just got to stay in your lane when it comes to risk tolerance on this. Whether that is you are depositing less than 100, hundreds of dollars or thousands of dollars, that's on a case-to-case basis. Now what I did was I exited before Saturday Night Live at the peak and I'm looking to re-enter, so only playing with house money. That's how I manage my risk when it comes to these types of plays. But I just want to give you guys the heads up on this one early before any potential catalyst moves this up. Now I'm going to touch on a couple of plays I would hold off buying right now in the markets. That's not to say these aren't my high conviction plays. That's just to say from a technical point of view, a cheaper entry price might be on the horizon soon. So again, I just want to give you guys the heads up. The first one, we've got NEO, ticker symbol NIO, coming in at $31 and some change. Now, this play has just recently broken its support. Support on this one previously came in at around that $34, $35 mark. But right now we know this one's caught up in a whirlwind. We know that growth plays are down, so that's affected it. Also know there's that rotation out of EV plays. That's also come into impact on that stock price. But also we know the slowdown in China numbers that have affected Tesla have also fed through into this one. You guys know what tends to happen with these EV plays is they tend to bounce off that Tesla stock price. So this one's come down, broken support, currently standing at $31. Now typically, when we see these plays break through support, they kind of continue to trend until they find their next support if the market is weak. And we know right now there's inflationary fears circulating, and that is affecting the growth plays even more. So I'm saying that this play could potentially find its way to $30, and if we continue to see downwards pressure, we could see this one break into the 20s. And that would actually be a price that we haven't seen in this play since October last year. So you guys know part of the winning strategy is to get these plays as cheap as you can. So if you guys are looking to increase your position in NEO or start new positions, you might want to hold off, wait to see how the next couple of trading sessions go. If you can catch cheaper entry, even better. Even more returns to be made on the play on the way up. Now again, I don't want you guys to be fearful of the stock price you've seen. This one's come down over 15% in the week, but we already know they posted up strong earnings and that should set them up. There are certain issues in the EV space with shortages and that kind of thing, but over time, just give this one, it might even feed into next year. But just know that if you're invested into this play, you're invested into a company with a strong brand, the dynamics of the industry are also positive, so this one should hit success once it overcomes the shortcomings in the stock market and the wider industry. Let's move to the next one. The next one I've got for that's ChargePoint Holdings, ticker symbol CHPT, coming in at $20. Now this one again, seeing some volatility, seeing some downwards pressure, and they're trading bang on support at that $20 mark. So over the next couple of trading sessions, it's worth you guys just holding off, waiting to see if you can make entry on this one at a cheaper price, because if they break through support, it's going to be a similar story. You're going to see this one trend down, and they could potentially continue to trend down through the teens. So could see this one at $18, $17, even $15. So again, you just want to be patient with entry on this play. But again, I don't want you guys to be caught up in the shortcomings on this one on the week, down 10%. This still remains a high conviction play for the investors into this one. Got to remember, as the EV industry continues to evolve and grow, it's going to need support from the infrastructure plays. And one of those plays that is going to win in that environment is going to be ChargePoint, because they've already shown business momentum. They've got the cash to continue scaling and growing, and they've just laid out the foundations. The next one I've got for you, that's ticker symbol PLTR, that's Palantir. Now, despite this play posting up solid earnings, showing that they could be a profitable business, we've still seen this one get wrapped up in the whirlwind with the rest of the growth plays. Now, in the previous drop, I said you guys don't want to be picking up Palantir at $19. They've now trended down to $18. Again, that's because they broke support at that $21 mark. So we need you guys, you might get better entry over the next couple of trading sessions if you just hold off entry on this play. What you want to do is you either want to wait for them to find their next support, or buy in momentum once they cross past that previous support at $21. So this is a play, strong play moving forward, but you guys got to know that in terms of valuation, this is one of those richly valued plays. Because of that, if you know the professional money managers, the hedge funds, if they wanted to crush this play, they could do so with ease because of that rich valuation. So it's just one that you guys want to make patient entry in. As I say, wait for them to find support if that's lower than this price, or buy in momentum once they cross past that previous support at $21. Now, although the growth plays are underwater today, we still have plenty of plays in the portfolio hitting success. You guys know the way that you win every day in these markets is by keeping it diversified. Just want to bring some of those to your attention. We've got Wells Fargo, ticker symbol WFC, coming in at 1.66% up on the day. This is a play that as we move through economic reopening, they're going to benefit from more business activity, and also in an inflation setting, this one is also set to benefit as well. So again, just another one to put on your radar. Got SLM Corporation coming in at 2.77% up on the day. This is that student loan provider. So naturally, if interest rates rise, this is a play that's going to benefit off the increased interest payments off those loans. This is a play that dominates the space, over 50% market share in the game, and is set to do well as we move through economic reopening as well. Couple other banks, got Goldman Sachs Group up 1.22% on the day, and Citibank up 1.4% on the day. Now, I've got 3 banking plays in the portfolio. I like to keep it diversified across the banking plays, because if any of these banking plays come into shortcomings, then that still means that my portfolio is protected, because I've got the other 2 to rely on, and that can happen from time to time. Even though these are 3 strong plays, I don't expect that to happen to. With these portfolios, it's always best to keep it diversified. So I want to drop a new play for you guys that will help you get some balance in your portfolios if you are heavy on the growth, and that's Alcoa, ticker symbol AA, coming in at $39. This is an aluminium play that, as we move through economic reopening, is set to continue its momentum. So check this out. Last earnings, increased revenues 21%, net income increased from 80 million to 175 million. So right now this play is on fire, and as I say, the economy is set up well for this one to continue succeeding going forward. So just another play I want to bring to attention, help you guys diversify, add some structure, quality, and additional depth to your portfolios. So those are the plays I want to run by you, help you navigate these testing markets. Now, all you guys got to do to ensure you hit success in these markets is just ensure you got balanced portfolios. A lot of you're working some great growth plays right now. Don't sell out of those. Just continue to build your positions while the prices are on the low, but then add some financial plays in there as well. Some plays that are going to benefit in an inflation setting, just to get that balance across the board. Now, what you guys got to know is the growth plays, a lot of them are becoming oversold at the moment. Oversold is just a market condition where there's more than fair selling pressure. So, and you guys know that by a lot of these plays coming out delivering great earnings, like a Grow Generation, like a Sonos, for example, and a ton of other growth plays. But that stock price is coming down on the day. Even logically, it doesn't make sense. But oversold market conditions is where you make your money in the stock market. The reverse of that is overbought, and this is when there's so much euphoria in the market driving these prices up to ridiculous valuations. That's the point in the market where you guys should consider doing more selling than buying. So I just want to give you guys a heads up on these 2 market conditions, so the next time we're in them, you guys know exactly what to do. So if you've been rocking with the channel, you know what time it is. Question comes from Oliver, says, hey Sankey, love your videos. For your ending technical bit, perhaps you can talk about reverse stock splits. High tide went through one today, so keen to get your overall thoughts. So let's dive into this one. I've received a few questions over the day about the high tide stock split that happened today. Now, stock split is just a way of a company increasing that stock price without changing anything in the business other than the amount of shares outstanding. That's why if you're holding high tide, you'd have seen the number of shares you're holding cut, but that stock price has increased. It went from about 50 cents up to about $7 or $8. And the reason why they've done that is to get NASDAQ compliance, because to get into the NASDAQ, you need a stock price above a certain amount. And there's other financial parameters that they need to hit to actually get compliance. So that's the reason why they've done it. Now, there's other reasons why a company might do a stock split, and one of those is to be more attractive to a different class of investors, because some don't invest into plays that are under a certain amount. So GE, for example, they were under $10 to their stock split, and now they're above that. So they appeal to a different class of investors. But ultimately, if you're holding high tide, well, you need to know this is a good business move, because moving into the NASDAQ is going to get them that exposure to a different class of investors. It's going to help that liquidity and help their capital raising efforts as well. But what you need to know is that it's just an optical change. Ultimately, it's just the same business, but they're trying to gear their business up to move into the big leagues. Alright guys, that wraps up for this one. Do drop me down any questions you have. Also, if you'd like to help out the channel, hit the like button, and I'll catch you on the next one.